Hello and welcome to AI Market News by LM. We are kicking off the week with a huge geopolitical development, one that is sending some serious shockwaves through the global markets. So over the weekend, President Trump dropped this bombshell declaration announcing a full-on naval blockade of the Strait of Hormuz. I mean, those words, all or nothing, they signal a massive escalation in the conflict with Iran. And you better believe it, it's injected a whole lot of uncertainty into the financial world. So you're probably asking, what on earth led to this? Well, the trigger, it seems, was the complete collapse of these high-stakes peace talks that were happening in Pakistan. Any hopes for a deal were just totally dashed when the negotiations fell apart, apparently over big sticking points like Iran's nuclear program. Okay, so let's get into the nitty-gritty of this blockade order and what it actually means on the ground. You know, the speed of all of this has just been incredible. I mean, look at the timeline. The talks fail over the weekend. By Sunday evening, boom, the blockade is announced. And now this morning, U.S. Central Command has confirmed it's all starting at 10 a.m. Eastern Time. We're talking about targeting all vessels, in or out of Iranian ports. To really wrap our heads around the scale of this, we've got to look at the Strait of Hormuz. This thing is like the main artery for global energy. And this move, it threatens to choke off almost 12 million barrels of Iranian oil that flows through there every single day. That is a stranglehold on a huge chunk of the world's energy supply. Well, it's no surprise that this news has just unleashed a massive risk-off wave across all financial markets. Let's break down that immediate reaction. The first and most obvious impact: energy. Brent crude futures just skyrocketed, blasting right past that huge psychological barrier of $100 a barrel. At one point, prices were up over 9%. Just pure chaos as traders try to price in this colossal supply shock. And if we look over at equities, well, it is a sea of red. U.S. futures are pointing to a really rough open. As we can see here, the S&P 500, the Dow, the NASDAQ, they are all deep in the red. It's like that relief rally from last week when we all had hopes for peace. Yeah, that's completely gone. Now, over in the Forex and bond markets, we're seeing that classic flight to safety. The dollar is getting stronger, which we can see with the euro-dollar pair falling. And USD/JPY is pushing up towards 160, a clear sign of big demand for the greenback. But what's really interesting here is the 10-year Treasury yield. It's actually going up, and that points to a much bigger fear that's brewing just under the surface. And what is that fear? Well, it's the return of stubborn, persistent inflation. This isn't just a geopolitical shock anymore, folks. It is rapidly morphing into a global inflation shock. Right, so that rise in bond yields, even while everyone is supposed to be running for safety, that tells us something important. It tells us the market is worried that soaring energy prices are going to force central banks to keep interest rates higher for longer. The fear of stagflation, you know, that nasty mix of stagnant growth and high inflation, is definitely back on the table. And if we want to take the market's temperature, the Fear and Greed Index is pretty predictably swinging hard over towards extreme fear. That just reflects all this anxiety that's spreading among investors right now. And let's be clear, this isn't just a Wall Street story. Various news commentaries are already making the connection to the real-world economy. We're seeing warnings that this oil shock could push U.S. inflation above 3%, absolutely crush consumer sentiment, and wipe out all those wage gains we've seen recently. So in this crazy new environment, what are the key events we need to be keeping an eye on? Let's take a look at the economic calendar for the week. Okay, so a few key data points this week just became way more important. The OPEC monthly report that's out today, and everyone's going to be digging through it for any hint of a supply response. U.S. existing home sales will give us a fresh look at consumer health, and the IMF meetings, which start today, will for sure be dominated by this escalating crisis. So here's the bottom line. Markets are stuck between a geopolitical rock and an inflationary hard place. All that relief we felt last week has just vanished, and now it's been replaced by this dual threat that complicates everything for investors and for policymakers. The big question for the weeks ahead is going to be, how does the world navigate this storm? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.